Welcome to all of our listeners to today's podcast. Today, we're hoping to encourage all types of investors, especially the beginners, and provide some great suggestions on how to get started. What does it look like to be an investor, and what things should we consistently do to increase our wealth? Welcome to Local Living Tri-City, your go-to podcast for exploring the vibrant communities of Temecula, Murrieta, and Menifee. Join me, Liz Jones, as we dive into real estate insights and local business stories, bringing you closer to the heart of our Tri-City area. Let's get started with today's episode. First and foremost, please understand that anyone can do it, but not everyone will. So let's chart a course. Having money to create investment dollars and financial freedom, how does that happen? You can do it slowly, steady, and those small plans always have the yield for best results. But you can also have big plans, and they beat the small plans. So to get big results, you need huge plans. Those big plans are powered by persistent effort. Over time, you'll be put in a position to win. And when you invest in real estate, you change your life. You change your family's future, and it provides you with the maximums that you deserve. Let's look at a few stories. So Barbara was a nurse, and she was struggling to support her 2 kids and her disabled husband. She transformed all of their lives when instead of paying off a long overdue disability settlement, she used it to buy real estate. In 5 years, she accumulated $9 million in real estate and now runs her very own real estate company. How about Wendy? Wendy bought her first investment while she was living in a hotel room. She made $20,000 a year and owed that much in student debt. And today, we can say that Wendy has bought more than 600 houses. She travels the country lecturing about investment and lives off of her investment income. I'd like that life. Or how about Carlos and his wife? They immigrated to the U.S. with $150 in their pocket. The couple and their sons now own more than several $1 million worth of real estate and run a property management company. They're living truly the American dream. And all it took was a little bit of determination. What they share in common, what they want in their lives, was a burning desire to change what they were looking at, what they were living. And they took path to the entrepreneurial world of real estate. So what keeps us apart from that? Fear and money. Fear keeps us from getting what we want. Fear can stop us in our tracks. Not only can it give us negative focus, but also a positive one too, when we galvanize us to take action. Respect fear. Keep going and move past it. Like the game of Monopoly, there are key strategies and plans that if you follow, lead to a win every single time. The secret is in the play, the plan, and finally the consistency. In planning success, there are good ways, better ways, best ways of achieving success. If I practiced, studied over time, my results would be outstanding. Paying close attention to my outcomes, being intentional and purposeful. You will find success in the things you do, no matter what that is. Turn to books and mentors and teachers and consultants. Learn from people's history. If I didn't have to learn from my own mistakes, I would be far ahead. Become a collector of success stories and models. We all have our personal ceilings based on current thoughts and habits. Proven models can help accelerate all of your accomplishments. Could that experience be by joining just a simple investment club? Or by reading a great book by Buffett? How about share your observations with others and get feedback? Owning real estate and being an investor are really 2 different things. There's financial freedom and wealth, and there's financial riches. Now, financial riches, is having lots of money. But the problem stops when the money is no longer flowing in and you stop working for it. It's a whole different ball of wax. But when financial wealth is present, It's about owning assets that have a job. They demand some of your time to manage, but those dollars generate a disproportionate amount that you've invested, and that secures you. Let's talk about step 1. Recognize a good deal and begin to act on it. When you learn the timeless truths about financial wealth building, how money really works, and recognize a good opportunity and are ready to act on it, your world can change. Back in the 1940s, there was a phrase coined by a quality control manager, Joseph Juran. He called it the 80-20 principle, and it speaks to how a relatively small percentage of your effort leads to the vast majority of your results. He referenced the Italian economist Vilfredo Pareto, who observed that 80% of the wealth was owned by 20% of the population, better known as the Pareto's principle or 80-20 rule. The idea that 20% of your actions lead to 80% of your results is a powerful principle that you can apply to everything in your life. It's about focus. Look at the highest achievers in any field, and you'll discover they have some powerful focus. In real estate investing, there are 3 simple but incredible forces at heart: criteria, terms, and network. We call it CTN. For criteria, what is it you buy? Is it a single family? Is it a multifamily? You have to decide. Those features make it attractive for resale. Where is it located? All of those things matter. These are the things that can't be negotiated away in any deal. The greatest opportunity at the least amount of risk. An opportunity filter. How about terms? How you buy it. Terms define how you turn it into a deal. It defines the value to you, now or later. Your offer price, your down payment, your interest rate. How is it conveyed? Whether it's occupied, who pays the closing costs. A skillful negotiation for better terms can lead to a better equity position, an improved cash flow, and sometimes both. It's about how much money you need to acquire and close a transaction, and how much the property will yield over time. Now, how about network? Who will help you? We all need a network. The network represents those that will help you in your investing. This could be all the people that help you succeed. The opportunities sent to them, the mentoring that goes on, the people who help you buy, like the agents, maintain the property like your power group, the people that help you cut the care and time. We call that leverage. Okay, let's take a closer look at criteria, identifying the deals. Terms determine real deals. Network is your support of those deals. And we think, we buy, we own, and ultimately we receive dollars. Don't underestimate the power of doubt in your journey to be an investor. People doubt and they lose their chance for financial freedom. Some common myths about investing. I don't need to be an investor. My job will do that for me. It will build wealth. I don't need or want more. I like what I have. How about it doesn't matter if I need it or want it, I just can't? Or how about the people that say investing is complicated? The best investments require a lot of knowledge. Investing can be risky, or I lose all my money. How about the successful investors can time the market, but I can't? All that's good investments are already gone. Less than 1% of people make enough income from their job to become financially wealthy. Let's take Mike Tyson, for example. Mike Tyson reported an income of $400 million over 20 years, yet he filed for bankruptcy and $23 million of debt. If you cling to the assumption that your job will continue to provide these extraordinary streams of income, you may be lost. The more money people make, the more overconfident they tend to be about their financial future. Prosperity can provide a false sense of security. And it's great to have trusted advisors to help you invest. Surely, I do not diminish the value of a financial advisor. To the contrary, I engage them, I have faith in them, I use them myself. But wherever your money is, you need to be there too. You need to be understanding how it's being invested. For those of you that are happy with what you have, and we really have no idea what we will need or want beyond today, you can't predict what your life will offer you down the road. We can't predict with confidence that the resources you need to deal with life's uncertainties will be there. Complicating things, it takes time to grow money. Financial wealth building is not something you can just accomplish in a reaction mode. Becoming an investor is about an everyday pursuit. Most people are taught to live within their means. What if you are encouraged to think differently? Instead of forgetting the dreams and living within your means, try pursuing the means to live your dreams. You can't do it. A lot of people say they just can't. There's no way. Well, if you were living up to your full potential, you could. And that's because it's an unknown. It makes no sense to limit you and your thinking if you can't do it. So that becomes your rationale for not trying. You can either think what's financially probable, or you can think what's possible. Possibility thinkers rarely utter the words, "I can't." Their potential is described as what's imaginable or what's possible. A mind shift for successful people is that there are 3 factors or multipliers of each other: time, money, and ability. So if you double your time or your ability and money remain the same, then you double your current investment potential. If you double your ability and your time, you know that you quadruple your current investment potential. Now, what if you were to double each of these 3 and increase your current investment? Guess what? Your investment potential is 8-fold. Investing is complicated, you say. Well, to be fair, everything is complicated. So all you really need to know is the basic rules of the road and know how to drive. The key is to take a step back and identify the aspects that matter most. Warren Buffett once said, "You don't need to be a rocket scientist. Investing is not a game where the guy with the 160 IQ beats the guy with the 130 IQ. It's risky. I will lose money." Well, it's investing. If you look up invest in the dictionary, you'll find to commit money or capital in order to gain financial return. You will notice investing like a pro isn't about taking huge risks. It's about having a sound criteria, the patience to find the right opportunity, and a willingness to take the correct action quickly. The best investors know this is what's needed, and they are dedicated to following this formula. How about timing the market? Yeah, sure, I'll do that. Timing is one of the most misunderstood concepts in investing. The economy is cyclical. Markets ebb and flow in these cycles. Finding the best time to buy and sell is called timing. What is misunderstood is how the timing is accomplished. Most people think timing is about active observations, like sitting on the sidelines and waiting for the moment to jump in. It's a passive, and then it's active, but crazy. You must be an active participant and watch the windows of opportunity as they appear. All good ones are taken? Well, that's another one I've heard. Well, every marketing at every time has its share of good investments. The only question is, by whom? There are 2 fundamental forces at work: economic ones and personal ones. They're always present, always at work, always influencing the marketplace and your decisions. All eyes seem to be on economics, and the most overlooked is the human or personal forces that present and create significant investment opportunities. What is that fact that every time there is an investment opportunity in some time is better than others? Let's look at the law of momentum. everything starts small. It's not uncommon for people to think that this could take forever, little compounding effects. It seems far-fetched to save small dollars and expect it to be different. I strongly encourage you to step past that short-term thinking and look at the larger implications of small investments. Compounding is an example of the snowball effect, where a situation of small significance builds upon itself into a much larger, more serious state. Approaching wealth building is like a spiritual journey. The Bible has over 2,000 references inside about money, property, and wealth. That's more than twice the number of references to faith and prayer combined. No matter what your personal faith is, spirituality and money are always connected. It seems that God may care about how much you think about money and your wealth and how you use it. Every time you open your wallet, endorse a check, use a credit card, you're making a statement of your spiritual values about money. The proof is in your priorities. Money in itself is neither good or bad. It's just how you use it. Let's talk about the power of leverage. Real estate is remarkably accessible to investors. Not only easy to understand, but it's easy to find and it's easy to finance. In addition, there are wide varieties of conventional and government-supported mortgage loan programs, even private owner financing. There are even programs for people with low income, poor credit, no credit, or those with little or nothing down. Practically no barriers on any front. Real estate does cycle throughout history, but even if it's always up, if you look at the charts, long-term trends are always going up. And as a result, people get the benefit of appreciation on a full portion of a purchase price. For example, if you have a person that puts down $30,000 on a $150,000 house, that is leveraged property, and it can appreciate at roughly 6.1%. So that's $159,100. And $9,050 should be weighed against the $30,000 you actually invested, not the $150,000 purchase price. So that translates to a 30.5% return on your investment because real estate is leverageable. The concept of leverage doesn't work only when you purchase a property. Once you build up equity position in investment, you can leverage that for cash in one of two different ways. You can secure a secondary loan against the increased equity or refinance an original loan, pulling out that money for the increased equity. And you can use that elsewhere. What type of investor are you? Let's take a look at that. There are 4 different investment profiles to consider. There's the investor who loves the right opportunity and buys the right thing. There's a collector. They love ownership, buys something, and holds on to it. There's a speculator, loves the action, buys anything that moves. And the observer, who loves the ideas, but buys nothing. The investor, by doing his homework, takes the minimum risk and gets the maximum return. A collector has a very low risk, but also a very low return. And the speculator takes high risk, but he sometimes receives high return. And the observer takes no risk and has no return. Which one are you? It's really, really important that you also track your worth. It is important to keep a personal balance sheet. It's possible that the greatest gift we can focus on, is your net worth and track it over time. Profit and loss, tracking your income and your expenses. A balance sheet is a snapshot for your net worth of your business. And the general ledger is what records all the details of your business expenses. All of these are important. Great to note and remember when investing in real estate, buy it right, pay it down, or pay it off. When you buy it right, You make your money going into the investment. When you pay it down, you'll be adding more to your equity buildup. And when you pay it off, you'll continue to receive rent or own it with little or more cash coming in every single month. It's almost like receiving an income. So what's really important here is to focus, what kind of investor are you? What are your plans that you're taking consistently every single day to become an investor, whether it's a big plan or a small plan? And how can we help you with those steps? If you'd like to discuss all of those visions, my favorite books, how we can get you started on plans of action for investing, how we can get you involved in real estate. It doesn't necessarily have to be here in California. It could be anywhere. I personally have owned real estate in Tampa, Florida, because I found my money went further there. I built a power team that was ready to serve. I have my favorite agents there. I have my favorite air conditioning people. We have it all squared away. And that's so we can find a way to stretch our dollar. If you need some guidance on how to best do that, please, I encourage you to reach out to us and talk about it. There's no obstacles other than our mindset on building our personal wealth. I hope you've enjoyed this podcast. We look forward to chatting with you at the next one. Until then, take care. Thank you for listening to Local Living Tri-City. Stay tuned for more insights and stories from Temecula, Murrieta, Menifee, and surrounding areas. Be sure to subscribe, leave a review, and share this episode with a friend that is passionate about the Tri-City area as you are. Goodbye for now, and we'll see you next episode.